Let's see what we got in the room. Oh, cool. Quite a few. Quite a few. Brilliant stuff. Okay. Just make sure we got hi Gary. How's everybody getting on? It is a market that is on the move. It's on the move, which is in a lot of ways a good thing. So let's see a couple of things that we'll check a couple of things that could be of interest. Hi, Jack. Hi, Jason. Really good to see you guys. Okay, let's have a quick look at the charts to start with, and then we'll look at what the kind of the background information is telling us. It's a tricky one because we've effectively got a market which is driven by things that aren't fundamentals per se, and there is obviously this kind of geopolitical situation going on. What I think is relatively interesting, if you look at I've got it on the Nikkei right now. Nikkei has dropped down by. I mean that's a just 11% move actually. We've had an 11% move so far down on the Nikkei from its absolute high, which is pretty good, but not really what I was expecting. If you kind of look through sort of some of the others though, the FTSE from its close up there, it's down around about 6%. Again, not as much as I thought. Now, interestingly, with something like the FTSE, and this is really important to know, one thing you can do if you're trying to protect your portfolio while still trading short is make a currency pair. Oh, sorry, make a pair, make a cross out of the indexes. So the FTSE has, and one of the best ways to have a look at this is if you want to look at, let's have a look at this. If we look at this, this is the FTSE 100. Now, what we're looking to do here, let me just make sure you've got my screen. I'm just going to do this. I'll just make sure you can still see my screen. Yeah, you got it. So what we can do here is think about because what's going on with a currency with a currency pair is one country is outperforming the other country, so you kind of get these fluctuations as capital flows into one country and away from the other country. So you're sort of trying to pick weakest to strongest. But even though we've only got MT4's list of products to trade, we can actually do something pretty cool with it. So this is a really good point to maybe build up an index pair. So if you look at the names in an index and try and look at the top ones. Now, if you look at the volume fallers and leaders, then this will tell you kind of what's going up and what's going down. And if you look at the table, then you can see what kind of companies are making up the index. So as an example, we can see down. I thought we just saw it. Did I just see it? Maybe not on that page. Let's have a look here. Here we go. Shell. We can see here, and if now if we kind of like go back to this thing, if we go the highest to lowest in market cap, then we can see the companies that have got the biggest sway. Now, let me just go back to page one. We can see the companies that got the biggest sway that make up the kind of like, the mainstay of it. AstraZeneca, HSBC, Shell, and BP are down here, both oil companies. Now, if you know that the Strait of Hormuz is closed, which we all obviously do, then we know that the price of oil has been pushed a lot higher, and these companies should do well out of it, because the price of oil is dependent on their profit line. So you can have a look at what is really driving each of these indexes. Now, if you know that something like tech is going to suffer because it's not able to kind of get the component parts for the products, they're going to suffer. So if you're looking at sort of like tech heavy indexes versus energy heavy indexes like the FTSE, then you can start to kind of like make an assumption on building a strategy around sort of building two indexes against each other, and you're looking at the percent change. Now, if you guys don't understand this, please do stop me. So in this example, you would go FTSE 100, or which equals the UK 100, I think. So UK 100, and this one you would long. And you would look at the Nikkei, which is down here as the, your guys may be slightly different for you, which would be the JPN 225. JPN 225. And you would short it. Now, you are not saying that the FTSE is going to go long and the JPN is going to go short. What you are saying is when they both go short, the FTSE will drop less than the Japanese yen. You could even bring the NASDAQ into play as well. Let's see what the NASDAQ's been doing. So the NASDAQ has dropped around about, what's that, about 20? It's around about 2000 from 2006. 8%, maybe, sort of like somewhere around about 8%. So this has dropped 8%. The FTSE's dropped around about 6, I think we established, and then the Nikkei's dropped around about 11%. So there are obviously sort of like other factors at play, and one of the main factors now is what the central banks do. So all of these can have a knock-on effect. But you could have a look at which is performing the best, which is performing the worst, which is likely to perform the best, which is likely to perform the worst, and you can make your own pair. But you'd have to make sure when you do it, you don't just buy the same amount. So it can't be 0.01 and 0.01. What you are doing is trading the percent of it. So when you're looking at it, if you look at the FTSE, the UK 100, the UK 100 is at 10,241. The Japanese the Nikkei is at 53176, so 5 times bigger. So really, if you are trading it this way, then you are to make the same amount, you're going to have to do that. You're going to have to do that at 5 and that at 1. So you get the same percentage moves. Now you're going to have to be really sort of like a lot more mathematical on the calculations of that, but hopefully that makes sense. If it doesn't make sense, let me know if you're interested. But it's just the case that you don't have to trade currency pairs. You obviously can trade the index as you like, but if you want a little bit of safety and a bit of cushioning, then you can have a look at hedging one against the other. So that's one thing to note. Now, if you look through the currencies, you can also kind of start thinking which currencies are likely to perform in it, and it's really about the environment. Normally we can look at the data, and we will have a quick look at the COT data. But normally we can look at the data and make an assumption on where things are likely to go. But because of the geopolitics of this, you've got to be thinking, okay, what kind of environment we're in? Well, we're definitely not in risk on. So when you're making sort of your assumptions, if you kind of like put in risk on and then risk off, Do you guys have a idea? Do you guys have an idea of which currencies would fall in the risk on category, risk on table? What would go in risk on currencies? Yeah, nice. So the Aussie would be one of them. NZD, nice. Yeah, definitely. And the CAD, yeah, I would definitely put that in the risk on as well. And it's because these are commodity currencies. You know, these all kind of like react to commodity prices. So this would be risk off on. What would be risk off? What do you think would be risk off? Yep, CHF. What else? JPY. Yeah, nice. Dollar. Absolutely right. And the dollar's the really interesting one here. It's the, do you know what the really interesting thing about the dollar is that it can go in either camp, but considering where we are right now, it kind of fits into this camp. So that means that already you can kind of think about these two currencies over here as secondary to the basket. So the pound and the euro may not be sort of two currencies that you would have to go and research, you know, straight away. But these currencies you'd really kind of like want to start looking at. Now, the chances are, if you're in a risk-on environment, the Aussie's going to go up and the Swiss is going to go down. That hasn't really kind of like been a completely straight scenario. But if we've got a situation where we are in the risk-off camp, so we'll just sort of like, you know, highlight this. We're in the risk off camp here. That means the chances that we should be looking for currencies that, or currency pairs that express that would suggest that we would be going Aussie yen and we should sell, you know, on the face of it. Kiwi yen would be a sell. Kiwi Swiss would be a sell. Kiwi dollar would be a sell. Now the CAD is a bit more tricky, and the CAD's a bit more tricky because of its association with oil. So this one I probably would put on hold right now because if the price of oil goes up, that's actually pretty good for the CAD. It can be good for the other currencies as well, but not the Kiwi, but the CAD is sort of like, you know, it's quite an oil wealthy country, Canada. So we probably wouldn't be sort of looking at shorting the CAD, but certainly this one we could short, and this one we could short. Now, the other sort of aspect is when we look at this, the dollar really stands out because payments are made in in dollars. So if payments are made in dollars and people are sort of having to buy oil from kind of other parts of the world, then there is a demand for dollars. So we could sort of like see the dollar going up. So let's have a quick look at these sort of like particular scenarios to start with. Aussie yen short, Aussie Swiss short, Aussie dollar short, and see what's been happening. So start with the Aussie yen. Aussie yen has been coming back. I'm just going to rub this one out. So the Aussie yen has been coming back. So this is where, after you've kind of like, you know, done that, well, we'll have a look at the chart actually in a moment. So the Aussie yen's been coming back. Aussie Swiss coming back recently after a bit of a rally, but the last 2 days it's kind of come off a little bit. And the Aussie dollar. Yeah, Aussie dollar is having an out and out kind of collapse back into the trading range. So the last 2 days have provided exactly what we've sort of thought. Not before that, to be fair, and you know this conflict's been going on for a couple of weeks now, but the last 2 days have really kind of brought the Aussie back down to earth again. What about the Kiwi? Kiwi Swiss, same. In actual fact, the Kiwi Swiss continued to push to the downside, didn't even break up. Kiwi Yen. Yeah, that got kind of got to the top of the trading range and started to push down, and Kiwi dollar. Beautiful, well, that this one's really collapsing down. So, really, sort of when we're sort of like looking at positioning, we should be really sort of like thinking about this kind of thing. Now, of course, this is sort of getting a bit more mature now, but we're sort of like we've got to be thinking about what kind of environment this is creating. Now, the next thing we really want to try and do is have a look what the COT data suggested. When we're sort of like thinking about these particular points of view, and incidentally, if for whatever reason you haven't entered into a um, a trade with the Aussie and the Kiwi and taking these shorts, you are late for this particular trade, but you are going to be early when things change. Because if this is genuinely being caused by the risk off environment, all you're really waiting for, you keep these ones on your watch list. You keep the Aussie Swiss on your watch list. You keep the Aussie Yen. Okay. Uh, is it all right now? Okay. Sorry, guys. Okay. I'm not sure what happened there. Um, okay. So what I was saying is that if you are late in, I don't know if you missed this, the past 3 minutes gone. Okay. So, um, we've just looked at the Aussie as a risk-on currency versus the likes of the Swissy, the yen, and the dollar, and we can see it pushing back. We've done the same with the Swiss, the same with the Kiwi. And what I was saying is that um, because this has started to happen and we know what the situation is now in Iran, this, yes, has probably got a lot further to run. But if you look at where the chart is now, this is now overextended. You see this bar here? That sort of like shows a state of overextension. So now this probably does have further to go. It's probably come down here. You'd probably be looking in this particular scenario at much longer term timeframes as well. So you could look at the weekly and make a judgment call that this is probably coming down here. But it has really kind of covered a lot of ground already from the highs to where we are. So you'd be late if you are trying to hop into this trade now. But that isn't a problem because if you know the reason that this has collapsed so fast is because of the conflict, what you are waiting for is that to pass, which it will. So as soon as that conflict passes, you know straight away, I want to be looking for buying opportunities on the Kiwi dollar. I want to be looking for buying opportunities on the Kiwi yen and the Kiwi Swiss. And I want to be looking for buying opportunities on the Aussie dollar, the Aussie yen, and the Aussie Swiss. So you can get in front. So even though you might be behind with this one, you can get in front on the next one because it will unwind again. So that's the first thing. Now, the next thing is, did the COT data give us any kind of information that would have suggested this could happen to, let's say, the Kiwi to start with? Now, let's bring in the COT data. So here we go. Now, let me just bring this chart up here. Get rid of that. So this is the asset managers. Now, with the asset managers, let's delete this one and just have the asset managers. So the asset managers are kind of, the fast money. The dealers are the kind of like the guys that really kind of push the actual currency. Oh, it's from. I'll post it in here from you. It's called. If you put this into Google, what will come up? Show you here. Go CFTC, and you see commitment of traders, and you look in here. So it's Commodity Futures Trading Commissions, and it looks like this. And when you go here, you can see there's a few things here, but if you look here, market data at the CFTC, you are looking for the commitment of traders, which is the COT report, COT, COT. Okay, so that's going to give you sort of the numbers that that you can then start building charts and all this sort of thing. So what are the commitment of traders suggesting? What was this suggesting about the Aussie? Well, we did see a move down. No, you're welcome. You're welcome. We did see a move down last week. Now let me just double check the dates are right on this. Yeah, the dates are up to date. Okay, they're all up to date. So we've seen now this is the fast money. This is where the fast money comes. What this is suggesting is that we are in trend mode. Because we're not at the absolute high, we're not the absolute low, we're in trend mode. So this is suggesting that this has got room to come down and be relatively safe. Let's have a look against the dollar and see what we got here. I'm going to take this chart away. Make sure this one's up to date. It is. Now the dollar's also in trend mode. What we saw is a big push down with the dollar, which because it was so they were selling the asset managers, which are the hedge funds and people like that. It's the faster money, and these are the speculators. But this is a pretty extreme move to the upside. But we are still in trend mode. We're not at an extreme high, and if you're an extreme low or an extreme high, this can happen. Boom! Look at this. Went to the extreme high, bang. Went to the extreme high, and it held there for a while, but when it came down, it really fell away. Extreme low, boom, and then it kind of calms down. We're not there, so that's all suggesting that trend is in play, which means that the dollar has got room to run. There's when we sit up here, that's when you start going, okay, that's timing. If you want to sort of think about timing, you think about timing and thinking, okay, when do I look for the Kiwi dollar long? Well, that'll be if the asset managers kind of push the dollar right the way up. If they speculate it's going really, really high. Okay, let's have a look at the Aussie. Get rid of the dealers. Right, now this one, interesting. But what's happened here? We're at the extreme high. Now we're going to have another look at the Aussie because this is about mining for information. We'll have another look at the Aussie because with this one at an extreme high, let's just have a look at the others really quickly. The Swissy is at an extreme low, which is of interest. This one's at an extreme low. The yen is trending, so not quite as interesting, but the yen is sort of like starting to come down. We want to see this down here, really, to sort of see if the yen would be of any interest. But the two most interesting, well, let's have a quick look at the CAD. CAD is right. The CAD's also at risk of reversal. And the reason that's the case is that if you look at the COT report, I'm going to show you something with the COT report in a moment. If you look at the COT report, then it's suggesting that the money is pushing the boat in one direction, and that's got a really high chance of flipping. So the COT report is released week on week on week on week. It's just determined that way. I'm going to show you another place to find it, which is a bit easier. And if you go to investing.com, you go to investing.com and you look at Friday. Okay, so look at Friday. So when you put up your calendar here, if you go down to Friday, here we go. This here, CFTC Aussie speculative net positions, this is the COT report. Okay, so when you're looking at it now, the great thing about this is if we click on this, you get the same chart. Look at the extreme high. See, that's what we saw with the one I've built here. We'll go back here. Where's my... Look at that. Same thing as this. It's just in bar chart form. Okay, so we're at an extreme here. And you can put it in. You can extend the time frames out, so you can sort of like see a little bit more, see where we kind of like are currently residing. And it's probably not that clear there, but that's a bit clearer. You take it from 2018. Okay, so you can just have a look at here, and this will tell you all of the COT reports. So you don't even have to build your own chart. You don't have to go to the commitment of trade. You can just find it here, and it will tell you the same thing. Next one down, we were looking at the Swissy. All of them should be here. We go. Swissy, speculative net. These are the asset managers. See, that's the extreme sell. And just to prove the point, we'll go to the yen, because the yen was trending lower, but it wasn't at an extreme. So let's see if we can find the yen. Here we go. There we go, trending lower, but not at an extreme. Okay, so the charts are already built there for you if you just want to sort of see them on investing.com. And then it's just sort of like figuring out how you're reading them. And really the way I'd read it is look at the extremes and then look at if we're around about the midpoint of the extreme, if we're sort of nowhere near the extremes, what direction is it going in? If it's going in a specific direction, that suggests it's probably going to continue. If it's an extreme, then you're anticipating reversal. So we know that the Aussie's at an extreme, so we should be anticipating a reversal. So now if we go back to the Aussie, that's had a pretty good run recently, you can start to look at where it's at. Now look, the daily chart. Now remember, the COT is week on week on week. So that's this. That's what's been going on here. So we've been seeing a really strong run with the Aussie. All of a sudden, it's got to an extreme. This has got some room to run to the downside. This is the Aussie CAD. The Aussie Swiss, not quite as good, and it's the Swissy we want. But the Swissy, if you look at this again on the weekly, right on a level of resistance here. We could now go down to the daily. The daily's seen this move down. So really we're looking for the reversal of trend. Right now this is still trending to the upside, but we're looking for reversal of trend. Okay, what about the Aussie yen? The Aussie yen was coming down. The yen was coming down, so it's not quite as good, but we know the Aussie's at an extreme, so it's interesting. Aussie's at an extreme. The yen on the weekly is at an extreme as well. Now let's just see if we can go change the monthly, see what kind of trend line we get. This is what we get with the yen. This is the best trend line we've got because it's broken through. And that would suggest that this area is the area of risk. Back down here again. If it gets under that level, then that could open the floodgates for yen, Aussie yen downside. Now we're well in front for this, so we're preparing. Now you're looking at sort of, what could move next week. Well, this is suggesting there may well be a short-term move in the Aussie yen even next week. You're just waiting for confirmation, waiting for a few things that could push it down. Okay, so that's kind of like what the charts are suggesting. That's what the COT data is suggesting, that the Aussie's toppy and it's going to be falling. Right now, the charts are still relatively supportive of the Aussie. Yes, we've had big sell-offs, but we haven't broken through significant levels yet. But we can get ready for that next week. Can it break through these lows on the Aussie Swift? On the Aussie Sing, and drive this, and continue to see this one fall. Now you can have a look at things like the Euro Aussie as well. This has had a pretty bad collapse as well. You can have a look at things like the Euro Aussie. Euro might be a little bit more tricky if you look at the COT data for the Euro. Then the COT data is saying, yeah, the COT data is also showing that this is a bit toppy as well. So the Euro also is under risk. You know, euro under risk, probably mostly against the Aussie and the sorry, against the dollar and the yen. So let's have a look at the euro yen as a possible. Yeah, you see that's broken through. So the euro actually, on a technical basis, looks the best to look for to trade next week. If this one starts to move back into this area and fails to get back above, this is going to start looking pretty good. Do we have an inverted head and do we have a head and shoulders pattern there? Kind of. Let's have a look at it. I mean, you kind of got this kind of going on. There's a neckline. You got this kind of double head here, and then the right shoulder here. So just pushing there, bouncing, and then down. That would look pretty good, and you'd kind of get a measured move of something in this region here. Wasn't a very straight line, but that's okay. So that leads us down to about there, 178, 179. And if we bring that onto longer term timeframes, this it's probably got a bit more room to run. Big week last week as well for the euro. So looking at these, looking at the COT data. Now remember, the euro will be affected because the euro does a lot of business with China, so the European bloc. So the euro will be affected. So looking at maybe euro yen, that could be sort of something that that we could certainly consider. So euro yen short is winning the race right now because the COT data is suggesting it's quite toppy. Um, yeah, exactly. I was thinking exactly the same thing, actually, Roberto. Yeah, you've got sort of a few patterns here, haven't you? You've got the double top um, up here. You've got head and shoulders. I don't love that head and shoulders. It's a bit sort of messy, but it doesn't really matter what it's called. There's certainly sort of like a rise up here, a failure to kind of get through, a push back down, a failure to get through. Then we've got this lower high here, but we don't yet have a lower low. We got a lower high. We don't yet have a lower low, but you got this squeeze kind of going on here. So you got this sort of like this triangle pattern. Let me just clear this up again. You got this triangle pattern going kind of going on here. So this is sort of like showing tension between it, and it looks like we've broken out, and that also gives us a measured move as well of this. So that pushes us down to around about 177. Um, so commitment is it's the same meaning as whether you think of commitment of anything else. So if I was a conglomerate, so the commitment of traders is the it's the conglomerate of traders, if you like. They have to kind of file the report about what they're doing. So if you me and everybody else in the room is the conglomerate, what are we buying next week? That shows our commitment. Let's say we're going to be, let's say we're going to buy the yen. We're buying the yen, selling the euro. So it's showing what commitments we've got. And then when we do it, when we actually sort of take the position, we have to disclose it to the CFTC. So that's what it is, Jack. It just kind of it forces the bigger traders in the world to disclose what they're actually buying and selling. So this looks good anyway. So this looks good. So somewhere down this sort of ends down here. It's actually lower than we thought. So down somewhere around in this area here, 177 maybe. And that, when you look on the weekly, is looking a lot more likely. There is some support down here. So this has got some room to run. The yen looks good. The euro yen looks good. So the last thing that we really want to check. I'll have a quick look in the background at the seasonals for euro yen for you. What's the date today? It's March the 15th. Euro yen actually is pretty bullish, kind of going into May. So seasonals are no good, but the seasonal is just a bolt on anyway, so we don't really care about that. And then the last thing we want to check is what's the data this week? And if we look here at this week, if we look specifically, really, we're going to need to pay attention to what's going on in the United States. ZEW economic sentiment. So this could be a driver for the euro short, depending on how it comes out. Nothing there. Trade balance, big number. You may want to write some of these down. You know which numbers are going to be the ones that I would look for. I would definitely look at the ZEW economic sentiment from Europe. I would definitely look at trade balance and not adjusted trade balance. Definitely trade balance from Japan. Higher trade balance, better trade balance. I mean, it's predicted to come in better than prior. That should drive the yen up. Massive CPI from the Eurozone. Now, this could actually blunt the trade, depending on when the higher oil prices start to filter into economies. It won't have happened quite yet. So there's a chance that this inflation number still comes in at 1.9 or below. That's going to be not bearish for the euro, but it's certainly sort of positive for the euro yen short trade. So you're looking at these inflation numbers, very, very important. If PPI from United States, definitely got to stay on top of that. What else? None of these from Japan. I wouldn't bother with any of that. Interest rate decision. So this is obviously the big driver. That is a big driver. Now, whether they move on the interest rate is questionable, but it's about what the statement is. Given the environment, what is the statement? If their statement comes out, now they need oil out of the Middle East. You know, that whole region needs oil out of the Middle East. If they can't get oil out of the Middle East, that will obviously push inflation. And these are the first central bank out of the ECB and the BOJ to comment on this after a monetary policy statement. So this could be the driver. The actual statement could be the driver. Now, whether you get in before that rate decision or after depends on what the charts tell you. If the charts give you an entry, personally, I would take it and then I'd manage it when it gets close to that particular statement, because what you don't want is for an opportunity to arise, you wait for the monetary policy statement and it disappears in a flash because the market moves. So if the chart allows on Monday to take a position, that's what I'll be doing. And I'll be trading euro yen short, and then I'll see if I can manage it into the policy statement. It could be a volatile time. So we got that. Wages in the Eurozone, I wouldn't even worry about any of that. Now they're up next. Wow. So these guys are up next. Oh, it's a big week, isn't it? So you got BOJ, then the ECB. So BOJ on the morning of Thursday. Actually, it might be different for you guys. Might be your afternoon, and then you've got the ECB later on that day. That's going to make that trade trickier. However, the charts will tell you, and the chart's got to be good. Can't be like, yeah, the chart's okay. It's got a lower high. You've got to have things lined up. If things are lined up, then the trade is on. And then it's just how you manage it, kind of going into these statements and these decisions. They might basically say the same thing and cancel each other out. And this is trading. You know, the charts can't tell you what they're going to say. They can only tell you whether there's been enough of an opportunity to get on board from a technical basis to try and stay on if they say what you need them to say with the trade. That's all that we'll get. So that is going to be that. And then current account and trade balance is also potentially a driver, but by that time, things would probably be rerunning. So that would be my positioning for next week, guys. I'll be looking for a euro yen short. There is obviously sort of still the option to completely avoid the euro and the yen because of the statements. But given the current environment, given what the data suggests, the only sort of caveat with COT data is that it's not supportive of the yen. It's supportive of a collapse in the euro, a decent move in the euro, but this isn't particularly supportive. But it's okay. It's right in the middle. We just need a kind of hold here, which might not happen until next week, but we can try and anticipate it if the charts allow us. So we're going to trust the charts and see if the charts can kind of get us into a position. Right, I will wish you all the very best for the week, and the main thing is to kind of like stay clear-headed. If you don't like a trade, don't take it. These things they're not mandatory. You're much better off because things just become clear. So if you haven't got absolute clarity or near to, just don't take the trade. Don't take it. Another one will come with clarity. It's much better to take no trades all year except for 5 and make 5% for the whole year than be trading in out, in out, in out, in out, in out and make a percent because you just like literally just traded everything. So be really, really selective would be my advice. Okay, have a good one, guys. I will see you next time.